Well, hello folks, I'm L.A. Little and this is your Daily NeoTA Wrap. We take a look at these markets and we do it from a neoclassical perspective. Each time we ask ourselves just one question: what happened today and what does it tell us about the coming ones? I do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's available to you there. You can subscribe to the channel L.A. Little, and anytime content's pushed, you'll get a notification to that effect. When we say we're asking one question, right, what we're asking is, did the market do what we expected? In other words, did it fulfill the setup? Because it's not just what you think and then you just move on to the next thought. It's what you think should happen given the way things are structured. And then, does it take place? Because either it does or it doesn't, and both of them tell you something. Right? Both cases will tell you something, and then you use that interpretation to decide what's next. Right? It's a feedback loop. It's not just one way. The market is going to tell you whether it's doing what it should, because you know what the probabilities are in neoclassical. We knew the probabilities the last 2 days was for a bounce. And a bounce we got, nice big one, right? Nice big spike up, 1.75% here on the Russell, 1.5% on the Dow, 1.25 on the S&P, almost a point or a percent on the composite, and on the NASDAQ, the index, 0.75%. And that was despite Intel missing revenue, or not missing, but saying they're going to miss revenue by something like $7 billion. Folks, the market structure, it's not perfect, but it's there. And most of the time, it's pretty accurate. You know, I don't know how to say it any more clearly than that. And I've done this show for, I don't know, 3 years now. And for those of you that have watched it for a while, you see the accuracy. You see how close it is. I mean, I don't make these calls in vacuums. I don't project the future as if I know. I just tell you what the market's set up to do and what those probabilities look like. And when you know that, you can use that to your advantage. And even if it doesn't work all the time, and it doesn't, it allows you to make better than average decisions. And that's what you're really about. If you just wrap some money management around it, you'll do pretty good. So market up pretty big here. What do we got? Silver up. Gold actually was up as well. Gold gave it up by the end of the day. That's kind of interesting. 111. Wasn't that big of a swing either. We'll look at that chart together. I was out most of the day, so I didn't catch most of the action intraday. I see the dollar was down, and oil down, nat gas down, and I think bonds were down just slightly. Bonds reversed today, so we'll look at that too. Let's pop over and take a look at what happened and what it means, both with respect to today and what's coming. So we'll have to read these charts together. I'm a little bit late, given that I was out of the office and I really didn't get back and get into this until just a few minutes ago. So let's see. So let's actually start with the NDX, because the NDX is what we were watching, and the reason we were watching this was because the NDX was coming back. This is one of the two strongest indexes. It was coming back to do a retest, regenerate, bullish off the prior swing point high. That probability setup is very high that it's going to bounce. And I said that yesterday and the day before. I expected to bounce yesterday. We tried, but it never quite gave it to us. The Russell did, but this one actually fell lower yesterday. Well, today it undercut it again on the Intel news, flipped around, and it's pretty much a takeaway bar tonight. So you take away all the badness, in this case, from the prior bar, and you try to head back the other way. Now, If I look at the index, right, I would be looking at this area here and saying, okay, where's the key area on the way back up, and it's right there. Right, that's where you would expect this thing to have some problems. It's about 43.78, it looks like. Let's get the actual number on it. The top of it is 40, well, the bottom of the zone, 43.81. The top is going to be 43.89. So somewhere in there probably is where it's going to have problems. Now it's interesting, and it happens most of the time, is that this actually lines up with something else, and that's when you can see when things are really interesting, right? Because here you got a swing point low. Now when we said here that this was a bullish retest regenerate zone, well, that's because it broke over a swing point high. Well, guess what? If you break under a swing point low, then that becomes a bearish retest regenerate zone. So as this thing rises back up into this area, probabilities favor, depending on how it gets back up there, favor it to try to fade back off of that. If it takes more than 6 bars, it's a pretty high probability that it will fail. In other words, it will succeed in regenerating lower. It will fall. If we get back here within 6 bars, probabilities are, a little bit better than a coin flip that it will still fall. And but then again, you have to factor in other things. For example, this has been a bull market, so it's not in a vacuum. You look at these things, I guess is what I'm saying. So yeah, probabilities are that's going to be trouble overall. If it comes back within 6 bars, it has a better than a little bit less than an even chance of actually falling backwards. But if we come straight back up there, yeah, it probably will fall back a little bit. But that's not where you should test that particular part of it. Where we should test that is where strength is. So in other words, I would say, don't worry about this chart on the way back up. This was the one to watch on the way down. What I want to go look at now is what's going to happen to some of these others on the way back up. In particular, the stronger ones. And that's the NASDAQ, which hasn't came back into the retest regenerate zone yet. That one's coming back up. There's a little gap area here. I would expect it tries to get back into that gap. And here again, you have a swing point low that was broken. And so this will be the test on the way back, and we're almost there. And so we're going to have it right there, and it is the gap. And given the way this is set up, I would expect it to get right up in there, close the gap, and test into those 2 bars, which is the top of the bearish retest regenerate zone. So that's the way that one shapes up. And then the other one I would be looking at is the Russell, which has really turned out to be the place to be if you want to be long. It showed it yesterday, and it definitely showed it today. Russell up big. Russell's coming back in, already back into the low of the high. This Russell is going to try to get and test a high, and that's, along with the composite, that's going to be the key. If these can get over those 2 areas I just talked about on the composite, and it can get over this high and hold it for a bar or 2, then we've got a whole different ball game going on, right? Because that actually, it's not going to go to a huge run, but it's going to say, hey, the bull is still in the house. And the reason for that is you'd have an ABCD structure heading back up, which would take you up, up in this area somewhere. And we'd have to do the measurement. We will maybe tomorrow or the next day. This high, this one got under the low, and it's already gotten above it. So this one's already told us, that from its perspective, at worst case, this is some sort of a sideways trend now. It's not trying to go this way. It's really going sideways. What we want to see is, does it get over the top and tell us it really wants to go higher? And that's where the sellers, if you just think about it, the market is made up of people and institutions driven by people and programs written by people. And so you're going to have those emotions and those prejudices in these markets. And so if I'm looking at this chart and I'm saying, where do I want to sell this? Well, I want to sell it right about there. That's where the least my risk is. Why? Because breakouts 80% of the time fail. Right? They usually get right over it and come back within 6 bars. And so if I want to take a shot at a short, I want to short it right there or just above it, or somewhere in this area. I don't want to short it here. That's why they always go back to where they're going. So, think about it from a logical perspective. If you wanted to risk the least amount of money, where would you put your short on? I'd just put it right about that high, or maybe a little bit higher. Maybe I'm looking for the stops to get triggered and I try to catch it just a little bit higher. Right? That's the kind of thought process that people trading these markets in large size, the way they're thinking about it. And that's why these things work the way they do. That's the Russell. So if I look at all of those together, it looks to me like we got some more bounce to go. We're going to go back to the top here on the Russell. We're going to try to fill that gap and get over that retest regen zone bearish on the NASDAQ composite. If we do that, that tells me that this gyration that's been going on is at least going to continue. And so I'm going to bring you back now to the S&P 500, which also broke a swing point low. And we talked, I think, about this last night. That's the bearish retest regenerate zone. This area here is going to be the the first area that's going to be tough. It almost got to it today. It'll probably trade into it tomorrow. Top of this bar is your breakdown bar, right? That breakdown bar, that top, that's a key bar. If you get over that, you're going to go try to take out this one, right? And so this area, to me, this area on this bar, this top right in here, is the key spot to watch the SPX and to see how it behaves. I would be very surprised if we don't get some sort of a little pullback off of that and then an attempt to take it higher, especially if we get up there tomorrow. So that's kind of the way that one's set up. Let's look at the sectors here and see if they tell us anything different. And so we'll come back in a second and look at those.
At TA Today, we have many services that teach trading to our clients. You can use LA's tools to trade and/or learn how to trade alongside LA using his neoclassical methodology. To earn these free services with no subscription or charge, go to our homepage, click on either the Tools and Earn Free Services or Trade with LA and earn free services. On this page, you can refer a friend. Fill out information about yourself and the friend you are referring, and you will earn up to 3 months of free service with no charge as long as your friend continues to be a subscriber. So remember, refer one friend and earn up to 3 months of free service with us. The more people you refer that sign up, the more months you earn. If you have any questions, let us know. Thanks from the TA Today team, bringing you tools and ideas to help you trade.
All right, everybody, welcome back. I'm going to take the sectors here just in the order and take the top 3 or 4 of them at least and look at them and see what we see. The real strength today looks like it was in the financials. Looks like it was across all these large cap financials. They had the stress test. The Fed published the results today. They really got a big boost, and they were started early this morning, never gave it up. And you can see the gap up here. Financials, big weighting. That makes them important. We talked last week that we needed rotation to keep this market going higher, and we didn't get it. Part of that we didn't get was the financials. We broke over the high right there and then gave it right back up, tried one more time, hit it with volume, and then gave it all up and came back the other way. Now we're coming back and we're going to test it again. We're going to try to get over it. Now we have another swing point high to deal with. So the way these things usually set up is just like this. So now you got another measurement point as you come back up, and it's this little zone. And where did we come to today? Right to it. So we're going to try tomorrow to get over it, try to skyrocket back over this guy. And if so, it can run all the way to the highs. If the financials do get over this high, that to me would be a very positive from a bullish standpoint. So that, again, is something that we can watch and use and measure to tell us what's coming next. That's the financials. Let's look at the next one. And these are sectors either that have been very strong or we're trying to be rotated to. So one that has been extremely strong has been the consumer discretionary. Nice big bounce today. This one left volume at the top, so this will go back up and test the top. So that also looks positive. The next one, highest percentage gain, almost 2%, was the utilities. That's just an oversold bounce, and I doubt that goes very far. And we will get bounce up here to this low, into this area, this zone that the TA today charts are showing you, but that's probably about all to go. So yeah, I can go up another 2-3%, maybe max. Consumer non-discretionary got a big bounce. That one got sold off real hard, came down. It's gonna create another low down here along with all these others. And let me see. It's fascinating how these work. So this one comes right back into the breakdown bars low, and what does it do? Stop right there. It's going to try to attack it tomorrow. This is the little zone, another place to watch to see if it can get over it. That's the discretionaries, and healthcare was the next largest move, 1.33%, and that nothing special about that one. And let's see, industrials. Now the industrials were one I thought we would get rotation to, but they had came all the way back. And industrials, and a number of these have done this. Industrials had a swing point high that they got over here. That's the bullish retest regen, but it fails to regenerate higher, goes lower, comes back into the next one, right? And it does hold there, right? There was a breakout here, it hadn't been tested. This is the first time it's tested this area after more than 6 bars. That's a very high probability it will bounce, and that's exactly what it's doing. I would expect that one probably bounces more and probably gets into the bottom of this bar, which is the high, 57.22. And let's see, none of these others looks that interesting. Let me pop over to the two weakest ones, XLE. I thought this one was going to bounce last night. Didn't, or it should have, didn't. That just tells you how weak it is. This one's going to go seeking lower lows as a result. And the other one, of course, that got hit was the SOX. Let's see how bad that one looks, because Intel got smacked. Actually, the SOX held up pretty well. So the SOX went under a big volume bar. Volume doesn't expand nearly as much. It holds that support line. This is going to bounce as well. So despite Intel, it's going to bounce. That also says the NDX is probably going to get a little more juice. And so all in all, not a bad situation. So sector-wise, looked like more bounce coming as well. And if we look at the OX markets, let's take a quick look there at the bonds and see what they look like. So these actually reversed today. All right, so it was testing. I've been telling members in the TNT room that it was going to test this, and this was the key test. 127.93 gets over it, closes under it. 127.11, that's a pretty good spike back down. This finally is coming back in. So my take here is that more than likely we're going to see the test back into this area, and then that's going to be the key, right? Does it hold there, or does it push back up? Remember, this had set up an ABCD structure, and we had seen this. Actually, it's easier to view it here on the weekly. ABCD structure to try to go lower. So far, that's still in effect. In other words, this hasn't violated it in any way, this bounce up. So we still may see it trade back down into this area, and this was the area I was looking for. If it does, it's probably going to be a pretty good buy down there, but right now it's still set up to go back down and try it. Let's look at the dollar. I know the dollar sold down some today. We had weaker retail sales early this morning before the bell. That kind of smacked the dollar down. The euro jumped up a bit, but that's just coming back in to settle. So I don't see this as anything long term. So that's a negative in my opinion on the equity markets. Okay, so I got a couple of viewer questions. Let's pop to those and see what they have. Okay, so actually there's just one viewer question tonight, so let's take this one. It says, hi LA, how do you define ABCD structure? I noticed on last night's Daily TATV that you showed the ABCD on the weekly chart on the UUP. I started at 2245 mark, And so let's actually draw this out together. So the 22.45 mark, yeah, I started right here, and I drew it up to there, back down, and then up again. And so let me see, swing point from October 3/14, I would start at the A point at the December 15th, 14th low. December, you would have started here. I think here is where she's talking about. Let me hang on just a second. He or she, I didn't read. Yeah. So you were talking about starting here. So rather than starting where I'm starting, you were suggesting maybe that ABCD structure looks like it's from here up. Let me grab a different pen color. And so you would have taken it from here, I assume, back to this area and then back up again. And so that's yours. Okay, so how do I define it? Actually, if you remember, there's videos that show you all this, but I'll quickly review it. And I've been asked this before. I do two things very different than most people. One is I use a weighted measurement. So on the projection itself, I want to use weighted numbers. In other words, I don't want to use the arithmetic. I want to use a percentage. And so I want to look at it and say, okay, the percent difference here is how far I want to project it there. I want a percent difference that matches this one, not an arithmetic. So it might have moved, $2 here. I don't just add $2. I want to add the percentage of whatever that $2 means. So that's one thing. When you're doing smaller numbers, it can have a huge difference if they move fast. When you're doing something like this, the numbers are almost the same, so it's not that important to talk about. The other piece of it, though, is really what you're asking, and that is, okay, why did I pick this point versus this point? Okay, the reason for that is I want to use the last time I've had a bar when I'm doing an ABCD up. I want to use the last time I've had some sort of a high, and then we pull back with a lower high and a lower low. And as long as that continues to go, then that's the bar I want to use. I want to use that bar's low. And if I go this way and I look, there isn't another one like it. In other words, this one has a higher high, lower low than that one. This one didn't have, was an inside day. All of these, none of these give me that except for way back here. That's why I start there versus starting up here. So that's, I believe, the answer to your question. It makes a difference, yeah. And is it right? Is it wrong? I don't know. I've done this for many a year. Many a years. I've found that this is a more accurate way to get a valuable, projection on the way up. And if you notice here, this ABCD structure here, this one, it's under the prior bar, under the prior bar's low. Under its high, under its low, that gives you the pullback. That's why in this particular case, I go from here to the high, back to that low, and then back up again. Okay, that's how I do it. All right, let's take and do the final thoughts. Okay, as we come back here for the final thoughts, if I look over in Europe, Europe's been driving everything, right? And so when I look at Europe, Europe actually has an ABCD structure as well. That structure is from here on the daily chart, from here to there and back up, and it's almost there. It's almost to its extension. I would expect Europe's going to get that extension, and then if you look at Europe, and I'm using Germany, the daily there on the German market to draw that out. If I look at it here on this time frame, right, this one has overextended quite a bit already. It was from here to there and back up. So this one's already finished its extension on the weekly. Now we're extending more on the daily, right? And that extension on this daily here, that extension is almost done as well. What does that tell me? Well, if I pull over the monthly, and Europe's been the rage here, if I pull over the monthly and do the extension on the monthly, and I'm just eyeballing this guy. It looks like it's from here to there. I'd have to look more closely. But the point is, and I'm pretty sure this is correct, it's also done. So we've had extensions on the monthly and the weeklies, done. Now we're getting one more extension on the daily, and it's almost done. What does that tell me? It tells me that I probably don't want to go throw a lot of money in Europe right now. I want to let it consolidate. I don't know that it's going to have a huge retrace, but I think the easy money in these markets has already been made, and that you're probably going to see some sort of consolidation. Now, Europe has been driving everything, and if Europe has been driving everything and Europe's about done, and I'm using Germany because that's the strongest economy inside the Euro, and therefore the one that I've been focused on. If that is the case, and if that's going to take a break, then are the other markets around the world going to somehow pick up the slack and run? Because that's the driver. My guess is no, and I wrote a piece this morning, and let me see right here, market character changed, so much your strategy. If you haven't had a chance, pop over here and read this. The article really basically says that if you look at this market, this market has had huge directional moves back and forth, right, up and down. This one actually was the little ABCD structure that didn't quite finish, and now another one down, and now we're trying to do one back up. This type of gyration is probably going to continue for some period of time. I don't think it's over. If Europe's almost done, if the dollar is at this elevated level, why did Intel just miss by the huge number? Who else is going to pre-warn? What other big cap companies are going to start fessing up and saying, hey, I can't jiggle my books enough anymore to make all this stuff work? When you're transitioning from a situation where you have some slack in your books, right? You can get past a quarter, maybe 2 quarters. But if whatever that slop is that you had gets taken away, because you can only keep so much slop around, if it gets taken away and you don't get a break in that your revenues don't grow, or you get some expansion in your sales, if you don't get that, then you're not going to be able to squeeze out those numbers like you're supposed to, and you're going to have to announce the shortfalls. Intel did it today. I suspect you're going to see more companies doing it. It's going to continue to put pressure on these markets. These markets, folks, are going to gyrate. They're going to go up and down, up and down. If you want to make money this year, it's not going to be get long, get strong, and stay that way. This nonsense that we've seen for seemingly forever, right, where these markets just go up, I think that pattern has changed, and I think that's an important thing to realize. Folks, have yourself a great night. Have a good one tomorrow. I'll see you again Sunday. Tell a friend, tell two. I'm LA. This is and it was your Daily NeoTA Wrap. Have a great night. I'll see you next time. Good night.